your loans or invest to get a higher return. Many people believe that paying off your loans early is better than investing for higher returns. Is this true? Hello and welcome. I am Prarthana from Clear, India's largest tax and financial services platform. At Clear, we have assisted 6 million tax filers so far. Do subscribe to our channel to support us and to get to know more about the best investments to reach to your financial goals. Good debts help you buy a house or give you a quality education to enhance your career. Good loans may offer you tax benefits and value appreciation. For example, suppose you avail of a home loan to buy a self-occupied property. The value of your house appreciates with time and you get several tax benefits. You can claim the amount repaid towards the home loan principal as a tax deduction under Section 80C up to Rs 1.5 lakhs per year. You get a tax deduction on the interest paid towards the home loan up to Rs 2 lakh per year for the self-occupied house under Section 24. Moreover, you can take a joint home loan with your spouse to enjoy tax benefits separately if your spouse is the co-owner of the property. Suppose you have availed of an education loan and you are repaying it. You get a tax deduction on the interest portion of the education loan under Section 80E without any upper limit. Good debt offers several benefits if you make repayments on time. Sadly, it is the bad debt which most people avail, and you incur debt when purchasing depreciating assets or items for consumption using high interest loans. Credit cards and personal loans charge you very high interest rates and are called high interest rate loans. Suppose you avail of a personal loan to go on a holiday or buy costly electronic gadgets where you don't need with credit cards. Banks and NBFCs can charge you personal loan rates ranging from 14% to 20% or even higher. Credit cards have a grace period and don't charge interest if you repay dues within its period. Now you have to pay interest on your credit card if you have outstanding dues on your account after this time. The table is showing personal loan rates and credit card interest rates. This table is showing good loan versus bad loan. When you avail of loans from banks and financial institutions, you must repay them within the tenure. A single missed EMI payment impacts your credit score and decreases your credit worthiness. Your credit card score is often referred to as your CIBIL score, where CIBIL stands for the credit bureau's name. You get a 3-digit credit score ranging from 300 to 900, reflecting your credit worthiness. CIBIL creates your credit information report based on your borrowing and repayment history and assigns your CIBIL score. CIBIL shares your credit history with banks and financial institutions. If you default on your EMIs or delay loan repayments, you get a low CIBIL score. Banks will not sanction your loans or give you additional loans if you have a poor CIBIL score. This table is showing a general understanding of CIBIL score. Want to know some interesting facts around credit bureaus in India? The Credit Information Bureau India or CIBIL launched its services in India in April 2004. TransUnion, a global credit and information services firm, has acquired a majority stake in CIBIL TransUnion, and CIBIL is the most popular credit information bureau in India. There are other credit bureaus like Equifax, Experian and CRIF Highmark. I hope by now you have understood what high interest loans are and why you must repay them on time. Comment clear if you are clear or drop your questions if any. Don't you want to know if you should invest or pay off loans first? You may avail high interest loans such as personal loans to buy electronic goods or for personal consumption. You must repay personal loans and credit card dues first before even thinking of investing for your future. You may believe that by investing in stocks and equity funds, you can get massive returns and repay high interest loans. Equity investments are highly volatile in short run and you could lose money if the stock market crashes. Suppose you invest in fixed income investments such as PPF, NSE, bank FDs, etc. to attain to your financial goals. These investments offer you an average interest rate ranging from 5% to around 7% per year. Is it not better to pay off high interest loans rather than invest in low interest paying investments? You must pay off high interest loans such as personal loans, credit card dues, and even secured loans like car loans before you invest for your future. However, exceptions can be made in the case of home loans. You get several tax benefits on a home loan for a self-occupied property. It makes sense to not prepay the home loan but focus on maximizing the home loan tax benefits. You save on taxes and avoid paying rent in most cases, which turns out to be substantial savings. You can focus on investing in equity funds through the Systematic Investment Plan or SIP, which may offer inflation-beating returns over time. Well, SIP is a facility where you invest small amounts of money regularly in mutual funds of your choice. You can invest in fixed income investments if you are not comfortable with equity investments. Personal loans can charge interest rates in excess of 20% per annum. You cannot get returns from stocks and equity funds that exceed these rates consistently. Credit cards can charge interest of around 2% to 3% per month, which translates to over 35% per annum if you don't repay the borrowed amount within the interest-free period. You may not get such high returns from stocks, and you must focus on repaying credit card dues. As interest rates on home loans are generally lower than most other loans, you can generate higher returns through investment. Moreover, as these loans have a longer tenure, you can invest in equity funds through SIP as they have the potential to generate a much higher rate of return as compared to the rate of interest you pay on the home loan. You must invest only after repaying high interest loans. If you do not repay your loans in time, you will get a poor credit score. Home loans offer several tax benefits and you must maximize them instead of prepaying the loan. Thank you so much for watching this video. If you have any queries related to investments and taxes, please comment them below. We will address them as soon as possible. Stay tuned for more updates and don't forget to subscribe to our channel for more cryptocurrency and finance related content. Take care and goodbye.